Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, 15th day of November, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. It also gives you access to the question box so that you can ask questions and participate in the discussion. On the days you're out of the office or away from your desktop, there are two additional ways to join the show from any internet-connected browser. Number one, point your browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the question box. Also, we stream live each and every day during this broadcast on our YouTube channel, which is very easy to remember, youtube.com/CFRN. Not only do we broadcast live each and every day on our YouTube channel, but we archive every daily show. Currently, there are over 1,800 daily live broadcasts archived there for your educational and viewing pleasure. With that, we'll open with a word of prayer. We're going to pray for America today. And I know that we have traders who are outside of America at different points around the world. So as we pray for America, we pray for your country as well. Heavenly Father, we thank you for your blessings, for your mercy, and for your grace. God, we pray today, make us a great nation, yes, but more than that, make us good, Lord, with a heartbeat that wants every person of every creed and color to know your love, to know your goodness, to know your worth. We pray, God, that you would make us wise as serpents, but gentle as doves. Turn our fears to faith as we look to you and you alone for the future of our country. Give us, God, confidence that no matter what happens, we will believe you are not only in control, but that you know exactly what is needed to accomplish your purpose. Help us not to second-guess your moves, but to move at your command, always and without hesitation. Forgive us for wanting our own way and making our own paths, often the ones paved with least resistance. Forgive us for fence walking or for ignoring completely the truths that can so easily set us free. Deliver us from mindless quarrels and destinations that lead us nowhere but away from you. Free us from divisiveness and melt our hardened hearts to love, not hate, to heal and not debate. In Jesus' name we pray. Amen. Amen. Well, happy Monday, guys. I hope it's a happy Monday for you, whoever you are and wherever you are. Let me give you the numbers from around the world here. If I can get my data to load. There we go. Looks like it's loading up. We'll start with the indices, or the cash markets as they're called, and starting at home here in the U.S. Currently the Dow is up 16 points, while the NASDAQ is down 43. The S&P 500 is down almost 3. And the Russell 2000, our man in the street, is down almost 14. No movers, no shakers. And only one of the indices in the green. Just barely. And that's the Dow by 16 points. In the commodity basket, crude oil down 99 cents, trading 79.80 last. That's a drop of 1.25%. Gold down $3.10, trading 18.65.40 last. Silver down 24 cents, trading 25.10 last. That's a drop of almost 1%, or $1,250 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 166 points, while the Shanghai lost 6 and the Hang Seng gained 62. And in the European markets at the close, the FTSE posted a gain of 4 points, the DAX rose 54 points, and the CAC rose 37. That gives us a mixed day in Asia, a green day in the UK, and so far it's a mixed radio Monday here in the US of A, as long as the Dow manages to stay in the green. Let me refresh my data. Yep, Dow still positive by just 19 points, but the NASDAQ, the S&P, and the Russell are in the red. So with that, we'll go to Michael for a recap of everything that happened this morning in the live training room. After that, I'll come back. We'll look at the logic alerts, the concierge trade alerts, and at any point during the broadcast, if you have a question, simply type it into the question box and we'll be happy to answer it for you. So Michael, if you're ready, you can take it away.
Just a sec.
If you're not quite ready, I can go to the daily chart.
Yep, I'm ready. I can grab it.
Okay.
Yeah, let me just put my name in here. And now I'm ready. Here we go.
Okay. I can see your screen. I can see your
Okay.
charts and spreadsheet. Okie doke. It's all yours.
All right, here we go. Good afternoon, everyone. Today is Monday. Yeah, happy Monday, everyone. The 15th day of November, 2021. So we're halfway through the month of November now. It's only 30 days this month. If you have not taken a free trial with us and you want to, then go to the homepage here at emitrainingschool.com. On this page, just scroll down to right here, where it says 1 week free trial. All we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know that you took the free trial, so you got to click on that link. All right. All right. Now, recaps. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. I think Dwayne probably just told you what a day it's been. Being facetious. Today, as I said, is the 15th day of November, 2021. Today, we lost 8 ticks in crude and we made 14 ticks in gold. We didn't trade the ES today, so we're only plus 60 on the morning session. Though today, it took 7 minutes and 3 trades to get the goal for the day. And at that point, we're up $140 a contract, and we ended, we took a total of 6 trades, and we ended with just $60 a contract. So we had 1 stop out. We had 1 good trade that made money, and we had 1 stop out. Only 6 trades this morning. It was pretty slow. So on the month now, we're at $3,265. That's over 11 trading days, averaging $296 per contract per 2-hour trading day. On the year, we've gotten the goal for the day on 217 out of 220 possible days. And that puts us at $125,472. That's over 220 days, averaging $570 per contract per 2-hour trading day. All right. If you were to quit when you got the goal for the day, so far this year, you would have worked a total of 59 hours and you would have averaged $2,407 per hour. Okay. $2,407 per hour on the year. That means right now you'd be trading 11 contracts, and this morning you would have worked for 7 minutes. Yet Friday morning, 7 minutes. 7 minutes. You would have worked a whole hour on Thursday last week. 2 minutes the day before that, 8 minutes the day before that, 12 minutes the day before that. Anyway, you get where I'm going. All right, so let's get into what did and didn't happen. Now, I said on crude as we were winding up the morning session that we're getting into this woo area right here. All right, we're coming off the BBC and getting into this woo area, which is what we're in right now. Let me blow this up a little bit so you can see it a little bit better. It's right in here. All right, this whole candle right here happened. We were right here at the end of the last candle, and this whole candle happened during the break. And the woo area, which is a window of opportunity, extends all the way down here. Now, I don't know what it looks like on the 4-tick range because I haven't looked at it yet, but I'm kind of looking forward to looking at it. Gold, we were looking for it to get into this woo area here or this woo area here, but it didn't. It's kind of stuck in the middle, and the S has been stuck all day. So let's just get started with gold. Okay. Oh, I forgot we actually did that there on gold. So we actually ended up with a little bit more. We got 2 ticks out of that, or 1 tick or something like that. I don't know. What does that say? We have 16 ticks on gold. That's what it says. So our first trade was right here. And on this trade here, we had a close below the trend line because when it bounced off the BBC right here, the cycle was the wrong color. Okay, so we took this right here and we picked up 14 ticks on that. We're looking for it to get down to this level back here. I thought it was going to take a while for it to get there, and it did. It was doing a cycle reset when it got there, and then it just went totally sideways and got into a big mess. So it got there pretty much to the tick and then bounced off it and came back up, and we didn't place another trade until over here. And I thought I got 1 tick on that, but it looks like I got 2, and that put us at plus 16. Okay, now I had that. I think I had that in there. Let me see. Nope, I didn't. Okay, so I got 1 more trade on the day. We actually had 7 trades, and I didn't count that one. Okay, but we did have this right here, and I missed that trade. I grabbed that one, and I missed that one, and I got a break even on that one. Then this was toward the end of the session this morning. We had this huge run up, and it just didn't give us a follow-up trade. Well, I guess it did right here, but I didn't take it for some reason. Oh, because it was the close of the morning session. That's why. So I had this huge run up right at the end of the morning session, and it was still going up as we shut down the morning session. Since then, it just went sideways again. Okay, so I'll fix the spreadsheet in a minute here. That'll put us at $80 on the day. The crude oil looks like it had a pretty active candle here during the break. This was the break candle right here. And it looks like it had a pretty active candle in there, but let's see what it actually looked like at the time. Yeah, it doesn't look like all that much, but it did give a couple of trade setups in here. Let's go back to the beginning of the morning here. We had break-even trade after break-even trade after break-even trade. See, it started out all this garbage here, and then the markets opened up. There was a short here that I missed, another one right there that I missed, and then we started getting into the ones that I took. I got that one. If I'd have known the day was going to be like it was, I'd have taken some profit on that, but I didn't. I had a break even there, a break even there, and a break even there. And then we get all the way over here. So this is like an hour and a half later. We get all the way over here, and I finally stopped out on this one that eventually went up to get me to break even, but I stopped out on it first. So we had nothing over there, a whole bunch of break evens, and then a -8. And that's where we ended the morning session with crude oil. And you can see during the break, it was all garbage right through here, and then finally it started to move a little bit. This looked a little better on the 30-minute chart, I got to say, but it gave one short right here and another short right here. And I guess, it gave 2 shorts, and that was it on the crude. The ES. Now, this is from last week, I think. I don't know why that was down there. But anyway, the ES was a mess today. Okay, we were looking this morning. It opened up right here in the zone. Okay, well, it was actually out of the zone then. But it got down here and it just went sideways and sideways. And I think right here was the one trade that I missed this morning, was right here. And that would have probably been a break-even trade had I taken it. Made this big leg down with no trades, made this big leg back up with no trades. Made this leg down, no trades there. There was one right here that I missed. That would have been a break-even. And then all during the morning session, it was just not giving anything up. Now, I said during the break that we might get some good trades during the break. It might open up during the break. And there was one right here. This leg right here. I'll draw the trend line for you so you can see it. This leg right here was a momentum short trade right down to there. And you could have grabbed one more in here. It looks like this. Right down into there. Okay. And that was during the break. I really don't see anything else during the break. If there was one thing, it would have been a bounce off the BBC right here, going back down to the zone. From 73 down to 70, even 71. That was the ES. So it was just, well, there wasn't a ton of opportunity today. I'll say that. Okay, and this ends up being a 7. Okay, and this will change when we make this a 16, because I forgot that one trade. Okay, so here we go with the spreadsheet again. If you're going to read it, you got to read all the CFTC risk disclosures down at the bottom. Today is the 15th day of November, 2021. We lost 8 in crude. We made 16 in gold, and we didn't trade the ES this morning. So we're plus 80 on the morning session. Today took 7 minutes and 3 trades to get to the goal for the day. At that point, we're at 140, and we took a total of 7 trades this morning. That puts us at $3,285 a contract on the month. That's over 11 trading days, averaging $298 per contract per 2-hour trading day. We've gotten our goal in 217 out of 220 days. And that puts us at $125,492 per contract per 2-hour trading day. So that's over 220 days, averaging $570 per contract per 2-hour trading day. Okay, so here we go over here. Now, if you were to follow the 2420 blueprint that you get when you become a partner, with a little adjustment, just adding 1 contract per month instead of doing it on a monetary basis. And you quit trading when you got the goal for the day. So you had 1 contract per month, you'd be trading 11 contracts right now. And you would have worked a total of 59.63 hours so far this year. And you would have averaged $2,402 per hour. All right, we'd place 703 total trades on the year. And well, that's pretty much how it would have worked out if you would have gotten everything exactly as I did. All right, this is all based upon what I actually did. All right. All right, so if you want to take a free trial with us and you haven't, then go here to eminitrainingschool.com. And on this page, all that we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent to confirmation link. You must click on that confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial, so make sure you click on that link. All right? All right, that's it, guys. With that, we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Excellent.
Alrighty, recap of the recap.
Today, it took 7 minutes and 3 trades to get to $140 per contract.
job.
Thank you.
All right, guys, that's what happened over the last 2 hours from 9:30 a.m. to 11:30 a.m. Eastern. Michael or Valerie, whoever's running the room, they're taking off trades live in real time, explaining every move they make, every rule behind every move they make, and answering your questions as they're putting on and taking off trades. It's the best learning environment we could think of, because it's interaction with a living, breathing instructor. Why'd you say that? Why'd you do that? What does that mean? Why is this important? And with each passing day, as you trade along in your simulator, pretty soon you start to catch the rhythm of the market. And per the 24/20 blueprint, as I think Michael mentioned earlier, part of that is we want you to put together 10 consecutive days in a row before, where you reach your goal in 10 trades or less, before you start trading live. And then you go live with only one contract. Your goal then is to increase your account balance by $2 grand. Then you get the green light to add a second contract. You only add when the blueprint says it's time. You only add one contract at a time, and you only add with profit you earned in the market. The blueprint is designed not to help you get rich quick, but to not blow up another account. So Michael just covered everything that happened this morning in the live training room with Logic 247, which is our 24/7 around the clock Emini alert service, which opened last night at 6 p.m. Eastern. Global markets open at 6 p.m. Eastern on Sunday evening. That's the beginning of the Monday session, and it will be the Monday session until 5 p.m. Eastern this afternoon. There will be an hour break, and then tonight at 6 p.m. Eastern, the markets will reopen, and that begins the Tuesday session. The beautiful thing about futures is they trade around the clock, so if you still have a day job, not a worry. You can trade the overnight session. You can trade the London Open. There's a lot of options available. Since the market opened last night at 6 p.m. Eastern, Logic 247, our around-the-clock 24/7 E-mini alert service, which includes crude, gold, and silver. We've issued a total of 14 alerts, 2 never triggered. We're still awaiting the outcome of 4. We've had 8 actionable alerts, of which 1, or 13%, would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. Now, along with the Logic 247 alerts, we still have our original alert service, the concierge trade alerts. Now, the format here is a bit different. We cover the same markets, but the CTAs are delivered as a static report shortly after the Globex Open. There's 2 numbers for each market. The numbers are good for the entire session. So it's important, make note of the current price of the market you trade when this report is published in the Telegram channel. Because if price starts trending up towards 46.91, that's bullish, and that's where you will look for opportunities to be long the market, using everything you learn in the live training room and the Logic 247 alerts. If, on the other hand, price starts trending down towards 46.64, that's bearish, and so you'll start looking for opportunities to be short the market using everything you learn in the live training room and Logic 247. If you want to grab a screenshot of these numbers, do that now. 5, 4, 3, 2, 1. So I can get this down off the screen so those messages will stop popping up. Okay. All right, so we'll go to the daily chart of the S&P, as we do each and every day, and I encourage you each and every day, or every time you sit down to trade, look at the daily chart of the market you trade. Not because you're going to trade off of the daily, But the daily is going to give you important information that you need to know so that you can make proper trading decisions in the time frame in which you choose to execute your trades. Now, I popped into the live training room this morning. We talked about the fact that because blue and climbing, this is the CFMA1, this red and blue indicator. Obviously, one is bearish, the other is bullish. One represents resistance, the other support. However, when blue and climbing gets directly above price, not alongside it, but directly above it, it has the potential to become good resistance. This little black line, it's called the step line. Okay, when price comes down to the step line, it can be good support. It can also be good resistance when approached from the other direction. And so we found resistance at blue and climbing today. We've now dropped to the step line, which again could be potential support. If we trade through that step line, then the next area for support would of course be the low of Friday, and then the low of Thursday, and then the low of Wednesday. The low of Wednesday is broken. That opens the window of opportunity, which we halfway filled, and we discussed the fact that on a bigger picture trade like this, price rarely moves in a straight line. So the fact that we went halfway through the window and then did a retracement to resistance is not a big surprise. Next time down, if we take out the low put in on November 10th, then we would look for price to drop further to the 24% Fibonacci price retracement. That's the shallowest possible fib, and these fibs are based on the last leg up. The low was put in October 1st, the all-time historic high was put in on November 5th, and it just so happens that the daily BBC is perfectly aligned right now with the 24% fib. So when price drops to the 24% fib on a daily chart, that's something that hedge funds, institutions, deep pocket traders, they see that, okay, and they take action. So that's why when price gets to the 24% fib, we expect a very nice bounce. Also, this green line, which we call the BBC, stands for bull bear cross. When price crosses above the green line, we're bullish, anticipating higher prices. When price gets below it, we're bearish, anticipating lower prices. And then when price gets back above it, as it did on October 14th, we're again bullish, anticipating higher prices. The market appears to be attempting to put in a turn here. Okay, so the step line is currently 46.63 and change. We trade below that. Again, the low of Friday is potential support, 46.4375, and then the low of November 11th, and then this low here that made it halfway through the window of opportunity, 46.25 and a quarter. If we take out that low, that's about a 20-point drop down to the area where we expect good support. And we expect support for two reasons. Number one, it's a 24% fib retracement on a daily chart. And the daily and weekly and monthly charts are what the institutions and fund managers tend to watch, sort of the way we watch range charts and 5-minute charts and 30-minute charts, etc. So when price retraces to the BBC, this is fluid across all markets and all time frames. When price drops to the BBC, we expect that to be good support until proven otherwise. Okay. Now, when price gets below the BBC and pulls up to it, we expect the pullback to hold because it holds more often than it doesn't, and it gave us another leg to the downside. And so in this scenario, when price hits that 24% fib and the daily BBC, we expect a very nice bounce. Here's the 24% fib retracement. Here's the 38. Here's the 50. Here's the 62. And here's the bullish cross that led to this entire move. When price revisits the area of a previous bearish cross or bullish cross, on a bullish cross, we expect it to be good support. On the bearish cross over here, we expected it to be good resistance. And it was. Okay? So, watch the support level at 46.63. If it breaks, then look for a move to 46.43. A break of 63 could take us to 43. Okay? Friday's low. Now, these numbers overhead, these are Fibonacci price extensions. If you understand fib retracements are where you expect price to retrace to before it finds support. It could be the 24, it could be the 38, the 50, the 62. It could ultimately end up being all of them. When you use Fibonacci price extensions, you're using the same 14th century math, but instead of looking for places of support, you're extending into the future looking for places of potential resistance. So from the low of the last leg up put in on October the 1st to the swing high put in on all-time swing high put in on November 5th to the retracement low of November 10th when we went halfway through the window of opportunity, the 24% Fibonacci price extension is right here at 47.32. The 38% extension is at 47.98 and 48.51 and 49.04. Okay. Now I have posted a chart with these numbers in the members Telegram discussion group. So you might want to grab it, download it, set it aside somewhere, or you can just simply use the tool to draw it yourself. Okay? Just take this little tool here, Fibonacci price extension, hold down your left mouse button and go from the low to the high, and then here, let me show you. Okay, from the low to the swing high. Oh, and I can't grab that. Okay, let me make these go away for a minute. Oh, come on. Drag that up to the retracement low. And there you go. Now, if you don't get it exact, it's okay, because fibs are an area. Sometimes price pulls all the way back to the fib. Sometimes it spikes the fib. You do want to get it, relatively close as possible. But don't fret over it too terribly much. Now let's put our fib retracements back on the chart, like so. So we know where to expect support based off the daily time frame. We know where to expect resistance. These are important prices, important areas. You should take a snapshot out of the discussion group. You can download that file probably, or just know that it's in the discussion group. But again, the more and more we discuss in the discussion group in Telegram, it's going to rise higher and higher, and so you're going to have to dig for it, which is why I suggest you might download it or print it out, whatever you want to do, because these numbers won't change until this swing low is taken out. If price does come down as we expect at this point, if we can take out support here, remember we got to overcome this potential support before there can be any further movement to the downside. Further movement to the downside means breaking that low, that low, that low, Now, price always reverts to the mean. In this case, the mean just happens to be green. We call it the BBC. It stands for Bull Bear Cross. Okay? All right. So that's all the important stuff you need to know about the S&P 500 E-mini futures. Okay? With that, we'll go to the 30-minute chart of the S&P. The zones you see on the chart are last week's zones. The weekly zones go out to our members Monday morning at 6:15 a.m. Eastern. We've published the zones since December 14th of 2009, over a decade. Now, when the new zones come out for our members on Monday morning at 6:15 a.m. Eastern, it's so that they have time to get them on their charts before Wall Street even wakes up for the day or for the week. I leave my old zones. I have the new zones in my notepad here, but I leave the old zones on my chart through Monday because, as you can see, last week's weekly trading zone, that's where the market found its low on this nice drop that we got. And there was a Logic 247 alert in there to coincide with this drop. Price came down to the zone. When price drops to a zone, we expect it to be good support. Price is now bouncing off support, looking for resistance. Everything I said about the daily chart, everything I'm saying about this S&P 30-minute chart is true across all markets and all time frames. Price flows on a monthly chart of crude the same way it does on a 1-minute chart of the S&P. It goes from support to resistance, back to support, back to resistance, back to support, over and over, again and again. It's a never-ending cycle. It's like doing the two-step. Once you can hear the rhythm of the market, you just simply step in 2, 3. You got your points for the day. Okay? So we came down to the zone. We expected to be good support, and it was. Now, members, don't throw out last week's zones until it becomes obvious that the new weekly zones have taken over. Because obviously the zones from last week are still holding sway over the market. We consolidated for hours last night, the overnight session, or early this morning. We consolidated at this weekly zone. Here is 8 a.m. Okay. Here is the 9:30 a.m. opening candle. You see how we turned to red and falling. Okay, we're just now getting our bearish cross. And so price, buyers are pushing it up. There will be potential resistance at the step line, potential resistance at red and falling. But we absolutely positively expect resistance if we make it all the way back to the BBC. That would give us an opportunity for another very nice trade on the short side. Now, the CTA numbers, which I gave you, the best way to deal with them is to draw a line in the sand at 46.91 and 46.64 in whatever market you trade, just as I have done on this chart. Okay. And remember, these numbers, they went out last night at 6:15 p.m. Eastern. Now, you can look at a CTA almost like a daily trading zone. The weekly trading zones, once they're published for the week, they're carved in stone. They don't change. Once the CTAs are published, they're good for the entire session. They don't change. Tonight, shortly after the GlowX Open, a new set of CTA numbers, or daily trading zones if you prefer, come out. Now, price behaves a certain way around important prices in important areas, like a weekly trading zone or a CTA. The most likely thing to happen at a weekly trading zone is consolidation. The second most likely thing to happen at a weekly trading zone is rejection. You're going to see consolidation about 70-75% of the time. Rejection, which you saw here and here and here, 20-25% of the time. Then about 5 to 10% of the time we have what's called a slice. I don't have a good example of the slice here, but we've had more slices of late than normal. But I will point one out to you if we come across one. So, first move up off of that zone, the CTA, price got rejected, just like price got rejected at the weekly zone here and the weekly zone here. On the second attempt, price traded all the way up to 97.50. So that's 6.5 points. 6 points at $50 a point is $300 per contract traded. And we've not yet triggered on the short side. Now, this line, which extends way back here, this vertical line separates Friday from today, the Sunday-Monday session. Okay? And so, do a little housekeeping and clear this up. Okay? So the official CTA on the short side for today is down at 46.64. We triggered on the long side. We've not triggered on the short side. Buyers right now are taking us up to potential resistance either at the step line, red and falling, or the BBC. Whenever the market finds support, that's all markets, all time frames. When it finds support, it goes and looks for resistance. Once it finds resistance, it then turns around and goes and looks for support. And so, seeing price come all the way back up to the BBC would be the best option, because that gives you the most room to trade on the downside. Okay? And again, these are last week zones. They're still on my chart, even though the new zones have already gone out. Tomorrow on the show, I will have updated my zones to comply with the new weekly trading zones. But just want you to always see like last night when the market opened. First thing we did was run up to the weekly trading zone where we found resistance. When we move up to a zone, we expect resistance. When we drop to a zone, we expect support. Here's the Dow. Off the open, we ran up, but we did not trigger the CTA on the long side. We then triggered right here, 360.90, and we made a run all the way to the published target, which is on every long alert, logic or CTA. The final trade to target on a long is always the weekly zone above. On a short alert, the final trade to price is always the weekly trading zone below. Okay? So the trigger, 360.90, target, 36,165. So that would be 175 points from the published entry to the published target. And so 175 times $5 a point, $875 per contract traded. And as you can see, no trigger on the short side yet. But price on the Dow is attempting to do a similar thing, okay, that it's doing on the S&P. The indices tend to trade in tandem. In fact, we prefer days where all four of the major indices are well into the red or well into the green. Those are your best trading conditions, when all four of the indices agree. And most of the time they do, believe it or not. You can go check and see. We already have a bearish cross on the ES. We're in the potential, in the process of getting a bearish cross. We just need a little more sideways movement. It's going to take a little time, a little patience. Remember, these are 30-minute charts. Now, a lot happens inside of a 30-minute channel. That's why you're able to use smaller time frames to navigate what happens inside of the 30-minute candle. You can use the 4-tick range chart that Michael trains you with in the morning in the live training room. You could use 5-minute chart if that's something you're comfortable with. You can use one of the tick charts that have become popular with some of our members. So here we're waiting for price to get up to the BBC where we expect to find good resistance. We got the red and falling, the step line, and the BBC, which all represent potential resistance. So we want to see price get up there, and then as we connect and then start printing red candles, okay, then we start looking for our opportunities on the short side. Okay. All right, so that's the S&P, the Dow. Here's the Russell. Okay, we got two-sided action. Russell on the short side, 2409. And on the long side, 2422. Let me do that. Okay. And again, you'll see 2422, 2409. See how I've drawn my lines in the sand? Okay. All right. So the market opens last night, comes down almost to the CTA, but doesn't trigger. Buyers come in, we get a bullish cross, we make a run at the CTA, we trigger 2422, and it runs right to the target at 2426. That's 4 points at $50 a point. That's $200 per contract traded. Price gets back below the trigger, triggers again. This time the high is 2480. So that's 2.8 points. At 2 points, it's $100. At 3 points, $150. Okay, and then balloon climbing turns to red and falling. Okay, so now we're looking for that pullback. Now, price traded through the BBC, consolidated at the zone. Now, these are last week's zones. The members, of course, already have access to the new zones. And now price has found support here at 2390. There's an actual weekly trading zone at this week 93/94. That's the support you're seeing here, this week's zone. Wouldn't it be nice to be short the market and know where to expect support before price gets there? What's the purpose of the zones? They are your fixed support and resistance for the entire week. Now on the short side, we triggered 2409 and we dropped to 2406.3. So to be conservative, we'll just round it up to 2407. It's 2 points, $50 a point, $100 per contract traded. Price got back above the trigger, triggered again. This time it ran to the target. From 2409 to 2405 is 4 points, $50 a point, $200 per contract traded. So the weekly zone is 2404/2405. And so here it's 26/27. So we use 26 as the target. Because this zone is actually 2404/05, we use 5 as the target. So from 9 to 5, 4 points, $200 per contract traded. Now, we had consolidation here. I can't really use this as an example of the slice because it's spread out over various candles, so I'll look for a better opportunity to show you what the slice looks like. But if you're a long-time viewer of the show, you of course know what it looks like. So what's price trying to do now? Buyers have stepped in at this important price, important area. at a current weekly zone, and buyers are trying to take us up. We found support, so now the market's looking for resistance. Will it be the step line? Will it be red and falling? Will it be last week's zone? And it just so happens, as it often does, rarely, but does happen, this is also a zone, this is also a this week zone. So price dropped to this week's zone, which was also last week's zone, consolidated, and then dropped to this week's zone, and now it's attempting to recover and go back to this week's zone, where it should run into red and falling, and the zone. We expect those to be good resistance, which would result in another leg to the downside. Okay. So we had two triggers on the long side, two triggers on the short side. Once an alert triggers, logic or concierge, there's a higher probability of it triggering multiple times than not triggering multiple times. Moving on to the NQ. Again, two-sided action. This number is 16249. As you can see, and then 16124. Okay, so let's stretch this over, and let's tighten this up, and let's tighten this up. Okay, so obviously the target on the long side is the zone overhead. Sometimes price doesn't make it to the final trade to target, but here's what it did do. It went from 249 to 276. 276 minus 249. That's 27 points. At $20 a point, that's $540 per contract traded. Then we traveled through last week's zone after we consolidated there, and then we triggered the short side 16124, and we dropped to so that's going to be 724, that's going to be 31, that's 31 points at $20 a point, $620 per contract traded. But again, once an alert triggers, there's a greater probability of it triggering again than not triggering again. So we get back above the trigger and we do trigger again. This time, we drop to 16082 1/4, so we'll call it 16083. So 124 minus 83. It's 41 points. $20 a point, $820 per contract traded. Now, price has run into the step line, that's potential resistance, which could lead to another short trigger. If buyers are committed, they may push us all the way up to red and falling, which if that becomes resistance, then we'll have another leg to the downside. And if buyers are really committed, they might be able to push us all the way up to this old weekly zone from last week, and by that time the BBC will probably be aligned with the weekly trading zone, and so if price ends up in this area, we would expect a nice move to the downside. The good news is you don't have to wait for price to get all the way back down to 16124 to take your trade, because once you understand the methodology and the strategy, okay, and you know where the important prices, important areas are, you know where the fixed support and resistance is, this is where you use everything you learned in the live training room and Logic 247 to take control of your own financial destiny. Our goal is to help you build a successful trading business. In fact, so successful, we want to get you to the point where you don't need us anymore. We want to teach you everything we know, show you everything we know. Now, we're a big happy family here at CFRN. We want you to remain a part of the family, okay? Trading can be a lonely business. So we want you to stay a part of the discussion group. We want you to stay a part of the morning sessions where we get to chit-chat back and forth as we're trading the markets. But what should be of most importance to you is that you learn to be self-sufficient. You need to get to a point where you don't need anybody to tell you when to get in or when to get out. Okay? You want to take control of your financial destiny. And our goal is to help you do exactly that. So we can see we've run into some resistance here at the step line. Price has backed off. Okay? We got 2 minutes left in this candle. If you look down here. Okay? Now the time reflected here is the time reflected by my computer. But if I hover over a candle, you'll see that my charts are set to East Coast time. So in now 1 minute and 5 seconds, we get a new candle. If it starts printing red, then it will provide us with another opportunity to potentially be short 16,124. Okay. All right. S&P, Dow, Russell, NQ. That takes us to crude oil. No trigger on the long side for crude, but we did trigger on the short side. And again, all of these trades were given to all of our members last night at 6:15 p.m. Eastern. Okay. Like I said, once an alert triggers, the greater probability of it triggering multiple times than not triggering multiple times. This first trigger took us from 80.45 down to 80.02. So that's $430 per contract traded right there. And then price reaches up. It gets above, then it gets just above the BBC, right? Which we expect to be resistance. When price pulls up to the BBC, we expect it to be resistance. We got just above the trigger. That's all it takes. And then we had a down move. Now, when the down move started, we still had red and falling. During the course of the move, it switched to blue and climbing. So, from the trigger, it basically, we double bottomed off that first move. So, the price value of those moves basically the same. Now, we get above the trigger again, but this time it's different. Not all triggers are created equal. This time when we trigger, we can clearly see that we have blue and climbing in our path, and that represents potential support. Yes, price did manage to trade right on through it. Okay, we dip below it, we pull back to the BBC, which we expect to be resistance when we pull up to it, and it was. The pullback holds more often than it doesn't. And from there, we go right to last week's weekly trading zone at 79.65/70. Support sends the market looking for resistance. We expect the BBC to be good resistance. It was. That sent us back again to last week's weekly trading zone, where we consolidated for quite a number of hours. Back to the BBC, resistance, looking for support. This time we didn't make it to the zone. Why? Because we ran into blue and climbing. Just as red and falling represents resistance, blue and climbing represents potential support. So crude oil is attempting a bullish cross here. Now, attempting and getting one, two different things. That's what a bullish cross looks like. That's what a bearish cross looks like. What could happen is blue and climbing could run right up to the BBC and then just roll over. Just like this blue and climbing rolled over, this one could do the same. Okay? It's simply a matter of patience. Wait and see what happens. Once price closes above the BBC, or depending upon how aggressively you trade, you might choose to be long. Let me just draw it in. Window of opportunity. Just keep in mind you don't have the confirmation of the bullish cross yet, but doesn't mean you can't take advantage of the opportunity. I don't know, 80.05 to 80.15. That's $100 per contract traded. And you say, but I can't live off $100. That's why you trade one contract until you've earned enough money to underwrite the second contract. And then you trade two contracts until you've earned enough money to underwrite the third contract. Because a 1 point move, or I'm sorry, a 10 tick move in crude is $100 with one contract. But by the time you've earned the right to trade 5 contracts, the same move is now worth $500. And by the time you've earned the right to trade 10 contracts, the same move is worth $1,000. But you have to be careful, because the temptation to trade a large number of contracts, let's say you've just retired or you've inherited some money. I mean, if you want to gamble, go to Vegas. They got free cocktails, they got attractive waitresses. This is about building a business. We don't take shots. We don't gamble, okay? We only want to trade the highest probability, lowest risk trade opportunities as we understand it and as we teach you, okay? So, when you become a member, a passport holder, you're not going to start trading your live account right away. If you do, you've already broken the first rule. You need to put together 10 consecutive days in a row in the simulator before you go live. You go live with one contract and you trade that one contract until your account balance has increased by $2,000. Now you have enough profit in your trading business to trade 2 contracts. The blueprint will notify you when it's time to add number 3, number 4, number 5, number 10. You only add one at a time when it's time, and you only add with profit you earned in the market. If you follow that, it will become very difficult to blow up your account. Now, if you break the rules, all bets are off. You'll probably blow up another account. The question is, do you have the discipline to be a trader? And honestly, not everyone does. That's not knocking anybody. Maybe that's just not God's plan for you. I can't say. I'm not God. Okay? Trading's not easy by any stretch of the imagination. But it can be simple once you understand how markets work and how price flows. Now, we're not the oracle, the man behind the curtain, the holy grail. We don't know what's going to happen next any more than any other trader on the planet. We're just the only ones that admit we don't know what's going to happen next. However, we do know with a great degree of probability what the next high probability move is in any market, in any time frame, based on some very simple underlying principles upon which markets operate and which we teach you when you become a member of CFRN. Price has begun its attempt to fill that window of opportunity. Buyers got to keep the pedal to the metal. Down the step line, we've turned to blue and climbing, approaching the bias line. If we can cross that bias line, that'll probably take us right to the top of that window. Okay. All right. We've covered the S&P, the Dow, the Russell, the NQ, crude oil. Let's look at gold. Gold didn't do a lot. Gold has traded mostly sideways. No trigger on the long side. On the short side, 1861. The first trigger took us down to 59.70. So that's $130 per contract traded. The second trigger took us down to 59. So we'll call that $200 per contract traded. Then we got back above the trigger, did it again, back above the trigger, did it again, got back above the trigger, but now red and falling has turned to blue and climbing, so we no longer want to short into what we know is potential support. And look what happened. Price moves up, price pulls back, blue and climbing acts as support. That's what we anticipate. Boom. We get above the BBC, there's the bullish cross, price pulls away, price pulls back, up close, and then a beautiful move from the open of this candle at 1866 all the way up to 1873. $700 per contract traded in this one candle right here. And that was the 9 a.m. Eastern candle. We then triggered one last time, but the drop only took us to 1860.2, so $80 per contract traded. And the final market, silver. When silver moves a dollar, when the price of silver moves a dollar, it's worth $5 grand. If you're trading futures. If you're holding an ounce of silver in your hand and the price moves a dollar, then you make or lose a dollar. But if you're holding a futures contract, then you make or lose $5 grand. From the short at 25.20, we dropped to 25.03. So it's about 17 pennies, 2 pennies, $100. Okay. And price gets back above the trigger, but now we got blue and climbing, so those conditions aren't good. We hit last week's zone, and what do? Consolidate. What's the most likely thing to happen at a weekly trading zone? Consolidation. Over and over, again and again. Important prices, important areas are almost always tested. Blue and climbing turns to red and falling. Price gets below the BBC. Okay? And as price gets below the BBC, now it's okay to short. And so this move took us down to a low, 24.97. So that's 23 pennies. That's just shy of $1,250 per contract traded. That brings us all the way back to the daily chart, where, as we discussed, the step line has served as support. Now we're trapped between resistance at blue and climbing, support at the step line. Okay? If price breaks above the step line, then you've got potential resistance at the high of November 9th, the high of November 8th, and November 5th, which was the all-time historic intraday high. And we've already discussed, if price takes out support at the step line, then we've got the low of Friday, Thursday, and Wednesday. A break of Wednesday's low most likely takes us down 20 points, which is $1,000 per contract traded, to the 24% fib retracement. Right now, this is sort of sideways consolidation. Okay. All right. With that, we'll take a trip over to our good word for the day. Last week, we were talking about what's in a name. We all know that God has many names. We talked Friday about Jehovah Nissi, or Yahweh Nissi, as it's said by some. Today, we're continuing with the theme, what's in a name. Our scripture is Exodus 14:13. Stand firm, and you will see the deliverance the Lord will bring. Now, this was Moses talking. They were a murmuring bunch. Moses answered the people, "Do not be afraid. Stand firm, and you will see the deliverance the Lord will bring you today. The Egyptians you see today, you will never see again." So let's look again at Jehovah Nissi, the Lord my banner. It isn't easy to hand our battles over and let God fight for us. Why is that? We need to work on that. We feel like we're copping out or just being irresponsible. Popular thinking says, don't just sit there, do something. We're like the drowning man who can't stop grasping at his rescuer. We imagine they need our help, and as a result, we end up making their job almost impossible, potentially drowning both of us. The truth is, we often become their worst nightmare. Truth is, we often become our own worst nightmare. But just because God fights for us doesn't mean we're not involved in the fight. The hardest part about the order, stand still and watch the deliverance of the Lord, is we mistake standing still for doing nothing or for being derelict in our duty. Fear says, just do something. Or as the famous Nike slogan said, just do it. Faith says, stand in faith, let God do it. I'd much rather let God do it than Nike do it. That's about as far from doing nothing as you can get. It is faith at its highest when we stand in faith and let God do it. So, if that's the case, how come we need spiritual armor if we don't do the actual fighting? That's a great question. Paul answered it in Ephesians 6:11. Put on the full armor of God so that you can take your stand against the devil's schemes. Now notice you wear his armor, not yours. You're to stand, not fight. 2 Corinthians 10:4. The weapons of our warfare are not of the flesh. Human methods get in God's way. Natural abilities are useless against spiritual forces. The grub of the dragonfly at the bottom of the pond may be a well-developed, vigorous grub, but once it becomes a dragonfly, the strengths of its grub life won't help it to live an airborne life. Whereas we once trusted in our own human effort, now we trust only in our banner, Jehovah Nissi. And that's our good word for the day. Friends, if you want to become a part of our rapidly growing family, all you got to do is visit eminifuturestrading.com. that's where you get your lifetime passport. That lifetime passport gives you access to everything we do, everything we've ever done, and all the stuff we're going to do in the future. Once you purchase the passport, it is for life. So no matter what we do, you'll never pay another dime. And you'll have something that 9 out of 10 traders do not have. The 9 out of 10 who fail, they don't have a living, breathing teacher instructing them, teaching them how to trade 2 hours a day, every trading day in an interactive environment. Imagine you wanting to become an electrician, a plumber, a brain surgeon, or a pilot, but yet you had no one to teach you. Would you still try to become that? But in the world of trading, people do it every day. Because it's designed to look deceptively easy. I assure you, trading's not easy, but it can be simple. Now, becoming a lifetime member means not only that you have access to a live teacher 2 hours a day, every trading day, but you also have access to unlimited one-on-one mentoring. You will learn our proprietary methodology and strategy. You will own our proprietary indicator set for life, and you'll receive the Logic 247 alerts and the Concierge Trade alerts for life. Everything a trader needs, all under one roof, at one low price, at eminifuturestrading.com. If you have questions, call Valerie at 949-42-EMINI, or just send an email to support@cfrn.net. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.